and welcome to SFI Not So Live. It's our December edition, the last one of the year, and it's going to be a good one, I think. We've got a really good special guest with us today. We're taking a slight detour on just being for brokers in the media, so we'll explain that in a second when we introduce him. But first of all, let's go around the rest of the panel first and do some introductions. Phil, welcome. How are you doing?
Morning, Jay. Everyone, hello. I'm Phil Lawford. I'm the Saffron Building Society's National Account Manager, and I look after some of our key intermediary broker relationships and make sure they get the service that they deserve.
And a regular on the podcast. If you listen to the podcast, you will have heard Phil before. And Leslie, welcome back. We haven't had you for a little while. Leslie, do you want to do a little introduction for us?
Yeah, absolutely. Hi, everyone. I am Leslie Terry. I am the Central Belt BDM at Saffron for intermediaries, and I've been with Saffron for 18 months now and enjoying every second of it.
And you're an award-winning BDM as of yesterday. Go on, tell us all about it. Let's did you have your little line?
Last night I was fortunate enough to attend an event with Mortgage Force in London, and I got Best BDM for the Midlands Region Award, which is a fantastic achievement and one that I'm really proud of. We attended a great night in London for a homelessness charity. The music was fantastic. The company was fantastic. May have had a couple of drinks as well, so I might be slightly bleary-eyed this morning. But yeah, it was absolutely fantastic night.
Brilliant stuff. Well done from all of us here and everyone on the podcast. Congratulations.
Thank you.
And now over to our special guest, because we're going to have a slightly shift of topic on our primary topic for the first one on technology. And I was aware of this gentleman's business for a little while, and it's actually a real pleasure to welcome Jesper to the podcast. Jesper, welcome. Can you give an introduction to the audience for us and a little bit about the businesses you work for?
Yeah, thanks for having me, Jay. Great to be here, and congratulations, Leslie, on the award. That's amazing. Homelessness is something that's really important and a problem we need to solve. I'm a great supporter of Beam, which you may know. So, I am the Chief Executive Officer at Smooth, and what we do at Smooth is a couple of different things, but overall, we are trying to make it easier, simpler, and more transparent to buy, sell, or own a home. And we do that a couple of different things. First, we have a two-sided marketplace called eConveyancer. You may know eConveyancer. We introduce consumers to conveyancing lawyers and then onboard them digitally using Digital Move. So what that means is I think we can all agree that, I hope we can all agree that home moving is fundamentally broken. The fact that it takes almost 6 months from you agree to buy a home to you sit in the front room and enjoying a cup of tea or coffee is just phenomenally crazy, and we need more people to be more passionate about solving that. We're doing that by using technology, specifically digital experiences such as Digital Move. The sort of fastest onboarding into your conveyancer, 21 minutes, and it wasn't one of our employees that did that. Normally that takes weeks and weeks as you wait for mail to sort of arrive at your doorstep and you completing paper-based forms. So we're eradicating that, making rid of that. And then we have recently launched a business called Smooth Complete, where we allow self-employed conveyancing lawyers that are very customer-focused, 4 years plus experience, to come work when they want, where they want, and how much they want, as long as they look after the consumer. We can talk more about that later on.
Brilliant stuff. And that puts you in a brilliant position to work on our first topic with us. But just before we launch into that primary topic, just a caveat from me. We are recording on the 24th of November, 2023. So by the time you listen to us, some of the rates or issues that we've discussed may be slightly out of date. These are our personal opinions, not necessarily that of the businesses we're working with, although I'm sure some of them will be relevant to the business as well. So that's enough of the boring stuff. Let's crack on. So as everybody knows, series, we talk about the property and mortgage markets, and I want to kick this podcast off with a slight deviation to talk about technology. I was at FTT Mutuals earlier this month, and I had the opportunity to meet with a lot of mutual organisations and some of the primary banks, and we were talking about the evolution of technology within our sector. And interestingly, lots of conversations about building society legacy systems, lots of conversations about the entire process, which brings in the surveying and the conveyancing side, which Jesper will be able to quite helpfully give us a bit more insight into. The conversation was very much about speed. But it was more about customer experience and the frustrations felt by customers and some of the things that were happening in the market as they were trying to move through. So I'm going to do this in a slightly different way. Come to you first, Phil. In the building society legacy systems have been around a very long time. We are renowned slightly for being a bit slow to adopt new technologies. So I want to talk about that first and the adoption of new technologies. You know, we talk a fair bit about open banking. We've talked about, you know, access to, I mean, this is a given, but access to credit records, that kind of thing. But it's more the process that people are a bit concerned about. But do you think that technology is the answer to speeding up the process? And I don't even mean speeding up the process, I don't think. I think also the experience for the end user. Do you think we need to adopt quicker? Do you think we are lagging behind?
Yes, I think we are, and the process needs to be more digitised, and we need to harness technology. But it's not the whole. It's not the complete answer. You're right. When it comes down to experience, sometimes it's frustrating when things don't go smoothly, and you're buying a house in particular, and sometimes remortgaging, but primarily buying a house is generally the biggest financial commitment of your life, and is one of the most can be one of the most stressful experiences of your life. And the frustration can be when you can't talk to anybody, and sometimes you want to make a phone call and speak to somebody, particularly if your circumstances aren't straightforward. So technology will play a massive part for all lenders, and if we can get rid of a lot of the boring, slow stuff that happens on every mortgage transaction, whether it's checking credits, checking their financial sort of commitments, their conduct. If we can make that automated and increase that, but every lender does, that's great. But there is a sector of the market that will always not fit the sausage factory, the machine. And that's where lenders like, you know, a lot of mutual building societies, that's where we come into play for the more complex stuff. I mean, at Saffron, we're changing how we define what we do. Until recently, we've said we're a specialist lender, but I think the specialist lending is perceived as being now as being second charges, adverse, bridging finance. We're not in that space, really. We are a complex lender. So when your circumstances aren't entirely straightforward, you're probably a good risk to lenders. But you know, a credit score might not be the answer, or your income might be complex, or the property you're buying might be complex, and that's where the experience is really important. So you've got somebody to speak to or easily contact, a good point of contact, and transparency. So the client understands what's going on and understands the timescales, because a lot of times frustration is when people don't know what the timescales are. Mm-hmm. And usually if you know it's going to take a little bit longer because of the circumstances, then that's fine. You can manage everybody's expectations. It's when you can't speak to somebody or communicate with somebody where that's where I think all the frustrations and everything breaks down.
We've had a lot. Sorry to interrupt, Phil, but we've had a lot of conversations in this podcast about with certainly with you as lenders, you don't just look at a credit report, you don't just look at bank statements, you ask questions, you do things additionally. Is any amount of AI ever going to be able to identify these things and give the advice that is needed? Because I think we were talking about, the locked data and the information that we can receive now. We talk about open banking and looking there, but even when it comes down to income, a paper pay slip is still a common thing nowadays. There's no standardized. So how do we know if that pay that's going in their bank is their actual salary, is overtime, is bonus payments? So actually, if we're taking 3 months pay slips, without that information, there's no amount of technology that's going to be able to do that unless everybody combines together, surely.
Yeah, you're right. I mean, if everybody's paid a basic salary and everything's nice in simple boxes, that's fine. But when your income might be derived from shares, investment income, you've got multiple businesses, you're retaining profits in the business, not necessarily drawing it out. That's where human intervention is important. So I think AI is a tool that can be and will be used for some stuff, but in terms of what we do, you'll always need a bit of human intervention, because we're not after the straightforward stuff. We're here to help and provide solutions for when stuff is slightly more complex.
Yes, but you wanted to speak on that?
Yeah, I think AI is sort of buzzword at the moment, and generative as AI, and I think there's lots of great applications that can sort of help our everyday life. But is it very different to any other automation technology that has sort of come before from a implementation perspective? If we think about data, I think we all, at least I do, and our business does, rely a lot of data. And data is great, right? Like what Phil just described, you can get all those data sources of that different income. But I suspect, especially in your business, Phil, you have people that make gut feel decisions on the base of that data. So are we ready to jump from where we are today to, even if you could have all those data points sort of coming in, do you have an algorithm that's going to interpret them and spit out a result at the end of it? Probably not. You probably have your value is added by looking at those data sources and say, actually, do we feel good about this customer? We're going to lend them some money. And I think if we think about that overall, there's tons of opportunity where we can make things better in the entire home moving process. Lending being one of them, obviously early in the process, right? But let's think even before that. If somebody wants to buy a home, there's questions that are being asked by the estate agent or could be asked by the estate agent that can feed through the entire process to make that more seamless, more smoother. And I think your point on transparency, if we tell people, why are we asking this data? Why are we sharing the data upfront? And what's in it for you? Then you get trust throughout that whole moving experience. Yeah. And that trust means repeated purchase. That means that we can spend more time with those customers, and it means a greater outcome for whatever the stakeholder, shareholder portfolio is behind whatever business you engage with. So I agree with you, but I do think that we need to be much better at collaborating throughout the sort of entire process.
I think I agree with that as well. And that was much of the conversation we had. Phil, I know we've talked about this loads as well. Leslie, you work literally day to day with brokers. It must be lovely for them to think that there might be a way that everybody can feed that information in. They know where it's all coming from because they're juggling so many balls for their customers. And actually, they do take the full brunt. I know you guys get a fair amount as lenders, I'm sure, yes, but that's in his companies. But really and truthfully, the brokers as a middleman, they must take a lot of pressure in this system, the slowness of it and the lack of understanding from the borrower. So surely new systems would be ideal for them.
I think there's an element to both. So I think with regards to AI, obviously it can be fantastic, particularly for particularly for your lower loan to value mortgages, 3 times income, automated valuation, just using basic salary, cases that would probably fly through a lot of lenders anyway. But back to Phil said, it's not one size fits all. And because we are a complex lender, for us, we do self-build and custom builds, knockdown rebuilds, also conversions. I don't think there's any amount of AI that's going to be able to look at that with the touch that our underwriters can, and the specialist lending that we do through that. Also, we're not an adverse lender, but we can look at customers that have a genuine credit blip through perhaps a little bit of naivety, or just, they've genuinely not known, like parking fines, for example. The amount of people that will have parking fines nowadays, and it's there's a lot of, companies out there that maybe are a little bit questionable with the car park. So where it's been a genuine credit blip, and you can see that customer is otherwise, pays everything on time, pays the mortgage on time, pays the bills on time, we can take a positive view on that. Other lenders, it would be a case of computer says no, or AI says no, it doesn't fit our policy. Well, we can actually physically look at that and say, okay, look, common sense here. We can see that's an isolated incident. And I think there will always need to be an element of that in mortgage lending, particularly with here at Saffron.
Do you not also think, and both Jesper and Phil both said it, it's the biggest investment of yours, one of the biggest investments of your life. You might do it more than once, but it's the biggest investment of your life. Do you not feel that we need that little bit of hand-holding and arm-rounding during this process? Because I remember when I did it, I needed the help, I needed the wraparound. I'm sure you guys probably felt the same way. Did you, Leslie?
Yeah, absolutely. I mean, I used to be a mortgage broker as well. So I worked at a new build brokers for 17 years, and there's absolutely is the biggest decision and biggest purchase of your life. And I think that going back to speed and transparency, if you are guiding your customer through it, saying, this is what happens now, this is the next step, this usually takes around about this long, as for this, I think that if you lay it out from the start and manage their expectations, then customers are like, oh, okay, they said this bit might take a little bit more time, or this one, I should hear back in the next couple of days, and you're giving your customer regular updates. I think it's about, how you manage their expectations from the get-go, and that's obviously, part of the advisor's job.
That brings me really nicely onto the process as a whole, and having a way of visually seeing where we're at and what's going on at each stage. As you were saying, Leslie, that borrower needs to know what the next stage is, how long the next stage is going to take, where it's at, and normally has to call regularly, bug somebody for it. So yes, but this is a good chance for you to come in and explain a little bit about what your company does, because I think you are addressing some of that issue when it comes beyond the lender to actually further down the chain. Do you want to just give us a little insight into what you guys do?
Yeah, but maybe first, before we sort of dive into what we do, I think we have to, and we certainly do that at Smooth, think about what is the customer experience? Like, what do you expect, right? And I typically say this to people. If you're using a map applications on your phone, like Google Maps, or you used Gmail, or maybe you're on Instagram or something like that, your expectation is at that level. Nobody is going to go, oh, hold on a second, I'm now going to go deal with my mortgage application or my conveyancing experience, my parts of my whole moving journey, and I'm just going to discount my experience by 50%, and then I'm going to be totally happy. That's not how consumers think. How consumers think is they're going to expect the same digital experience that they just engaged with in any other way. So if they just ordered and had delivered food on Deliveroo, or ordered a car service on maybe Uber or Ola or something like that, that's what they're going to remember. So we're trying to think that way at Smooth. And as I said, we're trying to help people sort of onboard, as an example, into their conveyancer. And the point that Leslie just made on getting sort of the updates flowing through and the expectation setting being met. we invested significantly into building Digital Move, which essentially is an onboarding tool that allows the consumer, once they've been instructed on e-conveyancer, to onboard digitally with their conveyancer. What that means is that we're not sending tons of paper, the conveyancer is not sending tons of paper to the consumer with a view that they're completed with their pen, and then they have to ask clarifying questions on, was that an A or an O, or do I really understand this right? And that, to Phil's point, that slows down the process. We're having nice, clean, actionable data available to the conveyancer, so they can get right working on the case, meaning that the time it takes to be onboarded is reduced too. And typically getting that paper back and forth and ask all the questions can maybe take a couple of weeks. The fastest case we've had onboarded so far into the conveyancer using Digital Move was 21 minutes. So there's already some time taken off that. Two, what we then allow the conveyancer and the consumer and other stakeholders in the case to do is to have a conversation in Digital Move. So they can ask questions, the conveyancer can ask questions to the mover. So what is, to Leslie's point, what's your circumstances around this? Have you thought about this? So we have a nice sort of secure and safe environment where people can communicate. And then the most important thing, I think, and certainly what we hear from all the different stakeholders that we work with, is we allow milestones to flow through from the conveyancer back to the different stakeholders. So the conveyancer will update when the searches has been ordered, when they're likely to come back. Have I asked questions? Has the contract been sent out? Et cetera, et cetera. And we allow those milestones to flow through directly to the consumer, but also through our APIs into, say, a mortgage brokering partner, so that they can present that, or to a lender so they can present that to their consumer in whatever customer experience that they may have, be a mobile app or a website, or even just through the personal conversation when you're sort of checking in with the customer. And that's especially important because I don't know if you'd be surprised. I was incredibly surprised when I heard from conveyancers that they spent 30 to 70% of their time answering questions where they have nothing new to say. So this is consumers calling up or estate agents calling up to their conveyancing lawyer and said, what's going on with this case? And conveyancers spending half their time, think about that, spending 50% of your time just completely non-value added as a result of somebody being stressed about they don't have an update. Instead, we're trying to drive that unnecessary admin down and be more transparent and more managing the expectations of the consumer and all the different stakeholders. Now, back to the technology angle, wouldn't it be wonderful if a world was standardized? And I was in online travel and probably sort of lived through 3 cycles of disruption. And I still, when I came to Smooth 3 years ago, and I was like, oh my God, inventory here is managed exactly the same way as we managed inventory in travel, say lodging inventory, hotel rooms inventory back in 1999. How can we move that forward? And part of that was standardizing different things and connecting different systems very seamlessly. Much to my horror, I went and saw some of our conveyancing customers and found that their systems are typically on-premise, sitting under a staircase in the office in a server rack. They are non-standardized because when the system providers sell to the conveyancing customers, they say, how do you work? And then they customize the flow to that conveyancing practice, operating practices, which probably feels good as a conveyancer. I mean, I don't know if you've sort of went and, I don't know, bought any technology and not had somebody say, here's what 99% of customers do, buy CRM solutions from Salesforce.com or something else. There's a reason why thousands of millions of customers use it in a specific way, because that happens to be the best way. So rather than customize stuff, let it be configured for the best way to do conveyancing or home moving or whatever it may be. And through that, you'll be able to connect the different systems much better so that there's not one definition of a milestone or one definition of a name or phone number and whatever. And through that, the industry as a whole can work together to plug that information together and let it flow much easier to different endpoints.
I really agree with that point, yes, because of I've worked for a number of lenders over the years, and the default reaction for lenders, not picking anyone out in particular, but is the new system needs to fit in with our way of working, which probably isn't the best way. And then once you start customizing it, you're diluting it. And really the starting point with the scoping of should actually be actually what's the best experience, and that's usually lost quite early on in the process, and it, I think on average, if a firm wants to bring in a new system, certainly with my past experience with lenders, it's sort of a 2.5 year cycle at best if everything goes well, and by the time it's in, things have moved on anyway, and a lot of that is due to having to, the provider having to make changes to fit with what the lender wants, and it's having that, it's turning it on its head, and thinking about the journey and the experience from day
It's
one.
a really refreshing approach, isn't it?
Yeah.
I think
Absolutely.
you have to look at this from a sort of countrywide perspective as well. The UK is so bad at infrastructure, and you look at land registry. That was promised. Was it 2 decades ago that was supposed to be digitalised, and we've got nothing. Nothing concrete in place yet. And yet, every time a house was sold, they could have digitized those things. There's just so much that's been promised, not been done. But actually, if you look across the entire of the sector and said, okay, if we had one thing sorted, we link them together. But I agree with Jesper. I think it's this integrated approach, and Phil, sorry, it's this integrated approach, and I really think that's the way forward. And I think these technological innovators that are coming through, and there are so many. I go to lots of events and I meet lots of technology companies who are dying to get involved and are looking at other European countries and how smooth the system is, and go, why can't the UK be like that? And we are a bit stifled and older. Jesper, sorry on that.
Yeah, I mean, I think it goes back to the point. There's lots of sort of positive forces that want to make things happy and a happier path, and I think we all agree. It sounds like it on here today. But I also think that there are different stakeholders that needs to be willing to change. You can build the most amazing sort of technology out, but if people are not willing to change, it doesn't help, right? And if I think about estate agents, great, they're going to get an agreed sale. And quite frankly, and I say this to our own estate agency customers, sometimes they then just throw it over the fence, right? And go, all right, now it's for somebody else to deal with. And typically that's the poor conveyancing lawyer that is, in many cases, underpaid for the complexity that they deal with. And everybody is sort of throwing stones at them and going, why on earth are you still working on this? Not understanding what is conveyancing and what is it that they're doing and why is that great for you? In the same way as the conveyancer themselves are finding it very hard to change. And it's finding those conveyancers that are customer focused, that are willing to change, that are eager to create a better experience, and of which there are many, unlocking them and allowing them to fly, right? I mean, and at Smooth, you asked before, what are we doing? We've recently, about a year ago, we started Smooth Complete, which is a platform business for self-employed conveyancing lawyers. It allows conveyancers to come do what they love, doing conveyancing, offsetting risk, finding out what you're actually buying. We take care of the onboarding and the post-completion, allowing that conveyancer to take on more cases, speak to customers more, to Leslie's point of being the human touch. And ultimately make more money so they can afford to spend more time on different aspects of the conveyancing journey. So I think there's lots to do, both on attitude to change and engagement and not pointing the finger. I usually say to people, like, remember when you point the finger, there's 3 fingers pointing at you. Engage instead, have a partnership. And then the real point is the government absolutely has to step up, right? They have to step up and create rails for this industry to evolve on. There's way too much cumbersome things going on. Like I think the land registry, sure, they can be better, but they have a digital agenda. They maybe need to speed it up, but they probably need to be helped by the rest of the of UK PLC, say, and UK government to get it going.
And I know that, and I heard from the event I was at earlier this month that there's been a lot of positive conversations, let's put it that way. But I think, this regurgitation of the ministers within government has caused such a lack of any kind of planning and conversion and moving forward. And I can go on politics for hours, yes, but I'm not going to start on that. But what I think you're absolutely right. And I have been hearing some really good rumblings from the Building Society Association, IMLA, working with banking associations. So there is conversations going on. But I think you're 100% right. I think it's about time everyone joined hands and started working together and coming up with a plan, and a plan that can work on, and then pitch that to the government and say, look, you haven't got around to it yet, so we've done it for you. This is how we want it to work. Now you give us what we need to help this and get this along. I don't think that's very likely in a pre-election year, but we'll wait, or an election year.
Well, I mean, let's look at it. I think we're going to come to the autumn statement, but there was 3 million to make home moving better in the UK. 3 million.
Yeah.
What is that about? That's a complete. It's like, don't even waste 3 million to do that. That's a waste of space.
I agree. We will come on to the autumn statement, most definitely. We are going to move on now, though, to our second topic. And this one is something that I know, Phil, you want to talk about. And Leslie, we have a little anecdote that I really found. I like what you found, so I'm going to bring that into this section. But this is about the rate conversation. Yes, but just for your benefit, we probably talk about rates and the Bank of England every single podcast because there's always something to talk about. And we had Ray Bolger last month. If anyone hasn't listened to last month yet, pop onto your platforms to have a look at listen to last month, because Ray was really helpful to discuss the economic elements of this. But the rate conversation is really not over. I mean, we are celebrating the success of halving inflation because the government did that, and as we said before, Phil, the only mechanism they've got is looking at these interest rates and keeping us down. So this is more about celebrating success, but the governor said we're not going to be talking about rates dropping just yet. We have still got inflation of just under 5%. Prices are still going up. Food inflation is really high. So actually the squeeze on real people is phenomenal, because it is the things that lower income families rely on, such as food, that is still increasing. But I think this is more of a conversation about why rates won't necessarily go down. Tony's not here this month, which is a shame, because he loves talking about his cyclic mortgage market. But Phil, I'm going to come to you first to imitate Tony's cyclic conversation. But it isn't really a time to look and think, do you know what, they're going to start dropping down now. We're not going to get that last bit of inflation down to 2% if we start dropping rates now, aren't we?
Yeah, I suppose my concern is there's a lot. The positives are there's a lot of good sentiment now we're seeing in the market, which is good. So we've seen, and Leslie will I'm sure Leslie will be able to reinforce this and probably articulate better than me in terms of what's going on the ground with brokers. But the overall sentiment is there's more. We're seeing more positivity. So brokers are seeing more positivity from customers. We're starting to see more purchase business coming to us. So this year has primarily been, the market's been very much held up by refinancing. That's really held lending up this year. But we're seeing some positivity, which is good, because there seems to be an expectation that rates are going to be moving downward next year. So I'm embracing the positivity, but I suppose there's this cautiousness there that I've got, that don't wait for rates to come down, because it might not happen. And trying to call and predict the market is a mug's game. You know, if I knew what the market was going to do, I wouldn't be sitting here now. I'd be somewhere else.
Have a lot more money and read a lot bigger house.
with a lot more money. So and the governor of the Bank of England, he's warned that rate cuts aren't a given next year. And it only takes one unexpected world event that will upset the apple cart. Nobody was expecting what's happening in the Middle East to happen, and that spiked or contributed to spiking energy costs. So, we need to be cautious and not call the market. So I suppose what I'm trying to say is, make your decisions now on what we know now, not on what we think might or might not happen. So it's not always a good idea to delay things. Make those decisions now. That's really where I'm coming from. Yeah.
Leslie queued you up there, didn't he?
Yeah.
Queued you up there because your anecdote that I've got in front of me, I absolutely love. Where did you find this?
So I actually saw it on TikTok, and it was posted on LinkedIn by one of my brilliant brokers, but it really struck a chord with me. Do you have it to hand, Jay?
Yeah, do you want me to read it out?
Please.
Yeah, I'm going to try and articulate it in a way. It's quite long, but I'll articulate it. So this is the point. In 1957, interest rates jumped significantly, meaning mortgage rates were 7.5%. So if you waited for interest rates to go down to what they were 18 months prior, you wouldn't have purchased a home until 2008 at the earliest. You would have rented for 51 years waiting for rates to go down. Meanwhile, the value of the property that you would have bought increased by 9,351%. So tapping very much into what Phil was just saying,
it's
don't
pretty
use rates as a I said, don't use rates as your decision maker, because we're so focused on rates because they've been so ridiculously low.
Yeah.
And we've lived in this low rate environment for so long that we really don't. I know we'll come onto affordability when we talk about the Autumn statement, and there is a reason for that. But yeah, we have been in a luxury point. But actually, this really demonstrates that, as you're about to say, Leslie, that rates aren't everything.
Yeah, and I think it's saying, don't wait to buy. I mean, I think that obviously no one could have predicted the housing market, particularly during COVID, and it was absolutely booming. But I think the days of you making £20,000 on your house in a year or two are not going to be here again for a long, long time. And I think that your main focus needs to be, can you afford your mortgage for the next 2 or 5 years? And if so, then you should be looking at moving. Historically, rates have been, certainly since I've been a broker, around about the 5% mark. I purchased my very first flat at the back end of 2007, which was arguably the worst time to buy. And I was on a 6.5% interest rate, and a rate of 4.99 back then was a cracking rate. And certainly for the last decade, we've just had it so good for so long, and the rates have never been that low. And I think that customers, new customers, and purchasers throughout the last decade have assumed that it may always stay around about there, whereas actually I'm sure, Phil, you've probably seen higher rates in the 80s as well, but around about 5% is generally where they have been. So I think that that 9,000% in a property value in 51 years is just mind-blowing. And you would have rented for all of that time, essentially paying somebody else's mortgage rather than being able to realise your dreams as a homeowner. So it's just down to your personal circumstance. But I think that the days of you hoping to make 20,000-30,000 on your house in the next year or so, they're not going to be here for a long time. Your main focus should be on affordability.
It's going to take a little while for this generation to not hear, oh, we were on like 1.5%, 2%, 2.5%, because it does. You always harp back, don't you? Everyone harps back to the past, but you've got, as you just said something perfectly there, concentrate on what you can afford for the next 2 to 5 years.
Yeah.
And I think it is that conversation that brokers should we have. Yes, Regan, any thoughts on this? How was the mortgage rate when you took your first mortgage? And did you have your first home in this country or somewhere else?
I did not have my first home in this country, but I did buy an apartment in London I want to put myself back, sort of, I think 1997. In fact, I had no credit rating to our conversation earlier, so I self-certified, and my interest rate was reflecting that for sure. But also, I completely agree. We've had a abnormal market in completely unrealistic interest rates over the last 10 years, and we have to sort of think back and normalize and get used to something that things actually cost money in the same way as everything else you're going to have to pay for funding. Is it going to be at this level or a little bit less? I think and I hope that it will be a little bit less, but that might take a little while to Phil's point to get us back to that point. I think the last, say, 3 years have probably taught us all that nothing is too predictable, and you can sort of throw the history book away. So think about new things and new ways of doing things, and use new inputs, new data to predict the future is absolutely required. Back to our sort of conversation from before, and those who embrace that change in whatever way is probably going to come out top. So let's embrace the new. Let's use new data and find a way that we can better underwrite risk, and find a way that we can probably assess people's affordability and willingness to pay.
There we go. Affordability Absolutely. Is a lovely word to put at the end of our conversation, because we're going to move on to the autumn statement and our little analysis of what we actually got from that. And I talking for me personally, not me personally in my circumstances, but what I expected to be in there was pretty much there. I think there was a slight amount of giving back with one hand and taking back with another, when yesterday being the day that the energy price cap went up, suddenly those savings that low-income families made are now being taken away by the highest cost of energy for any winter we can remember. So I think there are positives and negatives within, but I'm going to let's try and keep it within our sector. But what I want to do first is look at affordability. Leslie, coming to you on this. You work with a lot of brokers. Affordability has been a massive issue for a period of time now for some people. So for the self-employed, the post-pandemic period was a nightmare for them. But there was some relief, even for the self-employed, which I thought was quite nice, in that the tax wasn't on income tax, or the cut wasn't on income tax. It was on national insurance. So everybody's paying less national insurance. I mean, I don't think many of us are going to notice it, but it is a little bit of a warmth. But it's not going to have that much of an effect, is it, on affordability, and certainly for first-time buyers who are really struggling with affordability.
Yeah, it's not going to have a massive impact, but at least we're not worse off at the same time. So, every cloud. So, no, it's not going to have a massive impact, and there are a lot of factors when lenders are looking at affordability. But, we have products designed specifically to help first-time buyers with affordability, particularly our JBSP products. So there are ways that we can look to help first-time buyers get on the market. So I think that as well, they agree to increase the national living wage by, was it £1 an hour as well as of April? So, that's going to make a difference to a lot of people. A real positive difference.
That hurts on business on that one, but no, certainly for the individual, I think that's a huge. I think it's the largest jump they've ever done since we've had a living wage in, I think. So, another positive. So that's good. So we are attacking some of the lower end of the scale, looking to get on the market with impacts. Let's come to Phil, because this is a topic that you and I absolutely love, and that's house building. A couple of little bits in there to help along with house building. I haven't finished what I was saying yet. In nutrient neutrality, they've got a new policy there to basically try and cover that. So I think that's a very negative, but it's positive that we can build more houses. Negative because I don't like anything going in our rivers, but they have got that, and they have got some what I would say is slightly weakened, but some planning changes to try and get some more houses on the market, but still no housing targets.
Housing and planning reform. The government said they're planning to invest, I think, 32 million across housing and planning to unlock thousands of homes across the country. I don't know. Where's the detail on that? I can't.
This will make you giggle. I found an article this morning.
It was underwhelming for me.
Homes was 40,000. We're pretty short of about, I think, what is it, 2.5 million? So 40,000 is a little drop. But anyway, sorry, carry on, Phil.
Yeah, no. So overall, in terms of affecting our industry, it felt rather underwhelming. But I'm guessing we're into an election year next year. So what I suppose really what's important is what's going to happen after that anyway, whatever the outcome of the election is. So
And when they hold it, because he could be holding up his sleeve for a snap election in May, they might release something in the budget.
Yeah,
I
and
just don't know. I've read and read and read. I can't find any commentators who are willing to put anything on what might be in the April.
yeah, so realistically, in terms of house building and trying to start solving the supply demand issue, which because it is fundamentally broken at the moment. That's only going to start after. It's going to start in a new government cycle, which whatever the outcome of the election is. So what we really want is this. We need a long-term, cross-party, 20-year greenhouse building, agenda. That's what really needs to happen. So whatever happens, whichever colours in power, there's a. I think if you can get cross-party consensus over a long period of time, that's the answer. Whether that will happen, I don't know. But the optimist in me says that's what should happen.
And no mention of social housing, which you and I have always said
no,
is
I'm
a major
again
issue in this.
Sad, but I'm not surprised.
No.
Yeah, I don't think we're going to see that in the short term.
Just for the sake of anyone listening, there was cash for London, Leeds, and Cambridge for house building. There you go. Just read that as we were talking. Yes, but anything in the autumn statement that stood out for you that was positive for your industry, for this sector?
I hadn't seen the 32 million that Phil was talking about for planning, but I think we should be pleasantly surprised. That's 11 times what's in there for making home moving better overall. So although completely inadequate, it's another step sort of forward. I wish that we could step back to Phil's point and get some joined up thinking going here, and both between the different parties, but also between different stakeholders, public and private. There's a real need for not moving sequentially. I mean, spending 32 million on planning and 3 million on home moving, if that number is right, sort of just moves a bottleneck. And anybody who's done operational management will know that you're only moving as fast as your slowest sort of bottleneck. So let's just remove the bottlenecks overall. Let's work together to get it done. Let's change mentalities and be open to change. And to the theme that we opened this conversation with, let's try and use technology where we can to unlock that, will probably be me. But I wasn't high-fiving when I was sort of listening to the autumn statement the other day.
As a PR person, it's my job to watch it and to write comments for my clients, and I found it very difficult to write anything. And obviously I have my own political opinions as well. It was quite hard to switch it off. I did find one little nugget in there, Phil, that wasn't very well talked about, and I know it doesn't affect Saffron, it's the bigger banks, but the mortgage guarantee scheme, which was up until December this year, has been extended to June 2025. So there we go.
So I know a lot of building societies lend 95% anyway through old-fashioned mortgage indemnity insurance. So I did spot that, but again, it all seems quite small beer at the moment. Yeah, that's my.
I'm glad you bought a beer because there was a cut on the rates for beer.
Yeah, that was good actually. Yeah. So we can have a drink.
We can have a cheaper beer and a cheaper glass of wine, guys. So it's all right. It's all right. It's all good. Leslie's don't talk about alcohol. I was drinking that last night. I think one thing I've taken from this conversation, before we move on to our predictions for 2024, because this is going out in December, but just before I do, one thing I know, yes, you probably agree with me here, Phil, I know we've had this conversation before. It almost feels like there needs to be a working group across the chain, a chain-wide working group that bats their heads together on a regular basis and looks at this and says, how do we make this work? Does that exist?
I think there's lots of interest groups that are either recognized or not recognized. They sort of pop up, and that becomes a very desperate space. I think as much as I don't typically in my ideology suggest sort of government is going to do a great job of anything anywhere, I think there's a real need for some rails here, and it needs to not be only the usual suspects in the context of what we're talking about here, sort of big high street lenders only, or industry players that's been there for a very long time. I think there needs to be a good mix of fresh thinking, existing sort of players in the market, niche and larger, to really sort of agree on how do we, what is the priorities and how do we get them moving, and them not being 3 million for home moving and 32 million for planning applications, right? It's just so far out. Like let's just think big, then prioritize, and then start executing in a joined up way. And it will look and feel very different. And it will be hard because it will cannibalize some of the players that's going to be invited to the table of how they sort of protect some of their profit pots. And I'm a big believer in competitive forces, and I think that's a great thing that we can have new thinking that is going to ultimately be better for consumers as well. And looking after consumers should be what we all sort of think about. Like, how do we get the best outcome for consumers? How do we get them not being so disenfranchised after their move that it takes them years, 5 years, in fact, to sort of get back? I mean, our research shows that 58% of people do not want to move once they're moved for at least 5 years because they thought the experience was so bad. Let's just think about make the workforce and population mobile across the UK. And to do that, we have to build a better system.
Yeah,
I agree. Time to stop more lobbying. Okay, so just because this is December's podcast, it's the last one we're going to do. The next, just for the sake of the audience, the next one is out on the 1st of January, so we're going to record in December. So next SFI Not So Live, you'll catch on the 1st of January. But for this one, as we come to the end of the year, I want to go around the panel and just take a few predictions on what you think might happen in 2024, divided into two things. So what you think is going to happen, what you'd like to see happen, and what your dream would be. So almost like three categories. So a realistic, an optimistic, and a dream. So let's go to Phil first. Phil, you haven't spoken for a little while. Phil, what's your predictions for 2024?
Okay, yeah. From what I'm hearing, I think the expectation is that the year is likely to be backloaded, with half year two being more stronger than the first half of the year. That's what I'm hearing from some of our partners in terms of our market, the sort of the mortgage market, and interest rates are likely to be at a similar level to where they are now, maybe slightly lower. That's the general vibe. Again, subject to no nasty surprises. In terms of, I suppose, what I want to see, I suppose pragmatically, our markets generally like some certainty and stability. So it would be nice not to have anything catastrophic and uncertain happening next year. So a bit of certainty. I'm saying that knowing that we're probably in an election year next year, but I don't even mind it being a bit boring next year. If we can get some certainty, stability there. And what do I want? Well, I think I've already said it, and that's I'd like to see a long-term 20-year green house building plan that's where consensus is built. So that's what I'd like to see. So yeah, that's me.
Like that. Leslie, I know you're pretty much the same sector, but I'm sure you can.
I would say obviously 2023 has been a pretty turbulent year in the mortgage market. Lenders pulling rates last minute, and just really the market and the rates being all over the place. So I think moving into 2024, I think it will certainly stabilise. Be far less turbulent. I think that rates will probably even out around about 5%-ish as they have been historically. I think that the market will still be a little bit slower than it has been, but I do think that we will start seeing more people have more confidence for buying again once they know that this is more of a market that they're going to need to be used to. And then what I would like to see moving into next year is that lenders are helping buyers to buy, really, so that we're all lending to more customers than we perhaps have done this year. Maybe take a more maybe look at the stress testing a little bit. I know we've all had to increase our stress testing behind the scenes looking at customers, but I think that once we're comfortable the market is more stable, then maybe they're able to borrow a little bit more than they have been able to this year, so that it's still, comfortable for them should we hit any, testing times. But I think that we as a lender would like to help more customers this following year.
Like that. Thanks, Leslie. All about the customers. Really good. And Jesper, for your industry, or you can talk about the mortgage industry too, if you like.
I'll probably look at it from a customer angle, and I'll say I'll love some more stability and predictability. I think that is needed for all different stakeholders, and part of that is also, as we hopefully get into more of that stability sort of from a cost of living perspective, hopefully there'll be more competition. That's going to mean that brokers overall are going to really add value to their customers and find great rates in a true sort of remo as well, versus this sort of very high proportion of product transfers we're seeing at the moment. I think the building blocks for that, it probably takes me into the optimistic category of we're going to hopefully see some of those things that Phil alluded to in Ukraine and Russia, the Middle East situation and the like, to stabilize a little bit so that we can have that stability. And then lastly, my dream is let's just have more joined up thinking, more engagement from public and private, and more ability to change.
Perfect. There we go. And I'm going to put my 2 pence worth in. I know I'm only the host, but I'll put my 2 pence worth in. I would quite like to see some political stability. I think certainly over the last few years, we've had so much chop and change. We've had no sector specialisms, nobody monitoring and developing policy for our sector. So I'd quite like to just have one person in office who we can talk to, who can bring into the sector and who can support us and grow for the sake of not us, but for the sake of the borrowers and for the sake of the people looking to get on the property market, and certainly even for those who are looking to change. What a really good discussion. Do you know what? I think we can go on forever. We're running out of time, but it has been a really interesting podcast. Yes, but thank you so much for joining us. You've added so much to it. And do come back to us again. We'd love to have you again in the future.
Thanks for having me, and I'm pleased that the order statement allowed us to have more Christmas drinks at a lower price. So
absolutely great.
We'll go out and have one. We'll go out and have one this weekend, that's for sure. Leslie, thank you for joining us. It's been a little while since you've been on, isn't it?
Yes, it has.
It's nice to have you back.
Thank you.
Congratulations
Thanks for
on your
inviting me.
award.
Lovely to meet you, Jesper.
Likewise.
And Phil, finally to you, thank you as always, and we'll see you in January's podcast. I'm sure everyone on the team, the panel here, will join me in wishing everyone a happy festive period, Christmas, however you celebrate, and a happy new year. And let's say our next podcast will be out on the 1st of January. Just before I go, I'd just like to announce something I announced to the team at Saffron yesterday, but SFI Not So Live is now the #1 mortgage podcast in the UK. We've gone from 6 to #1, which makes me very happy. So from the #1 mortgage podcast, a very happy Christmas, happy festive season, however you celebrate, and we'll see you in January. See you guys.
Bye.
Bye.
Ho, 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 ho.